Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the continued pumps on the chart. We are just seeing a little bit more green as altcoins continue to try to front run a potential bullish signal on Bitcoin, suggesting that Bitcoin may need to have a mean reversion to the upside sooner than later. However, one thing that we do have going against us, of course, over on the good old Bitcoin chart is that we have been in a bear flag formation. And so you can see this bear flag that I've been pointing out several times over the last couple weeks as it's been formed. And as this, pardon me, falling wedge threatens to be a failed breakout, to have a failed breakout, we could potentially see this bear flag just play out to the downside. And just from a macro perspective, that would put us around that $10,000 range and potentially within striking distance of that $8,200 level that I do like to target, around that $9,500 level that I like to target. That's my zone. That's where I'm looking at for the potential bottom of this market. And while there are very valid cases to take us even lower, as well as very valid cases to suggest that we might just bounce higher and that Bitcoin has had most of its pullback that it's going to have in this macro decline, I'm still personally favoring that $10,000 to $8,000 range, whereas the general market is favoring approximately 11,000 to 14,000. So you can choose, your own place on the chart where you kind of where you just have a better feel for it. One of the things that is also influencing my consideration here is taking a fib retracement of the entire Bitcoin chart from its origin all the way to its double top, because this might be a macro stocks commodities super cycle, and this double top may be a toppiness on the entire Bitcoin chart, not just on the last bull run, which for me suggests that I should have a bias to the downside. And therefore, when I look at where I'm going to target my 886, lo and behold, it's around 8100. Okay, so 8,200 to 9,500 is still the place where I'm targeting. And of course, if you guys are wondering where that $9,500 number comes from, of course, it's actually this CME gap over here around the 9,800. So I should probably say 8,000 to 10,000 is my range. And then we do have just a tiny little CME gap at 11,000. So, if either of those get filled, and most CME gaps do get filled, I think there's like over a 90% hit rate for filling those CME gaps, then of 11,000 to 14,000, you see these peaks and this kind of support up here. That would actually be a very reasonable range. I think that in the long run, if we did collapse down to $11,000 to $14,000, no one would feel too bitter in the long run. Not financial advice, but just considering the potential on the charts, and that would be within this already proven value range for Bitcoin. 11,000 to 14,000 would be very reasonable as Bitcoin takes the next era up, which which could just as easily just sit directly on top of that. In other words, kind of break even, right? Or it could be a massive bull run in the next cycle, even outstripping our previous bull run, which means that again, 11,000 to 14,000 is a very reasonable number. Now, there are others who are very conservative and looking at strong indications that this market may be creating a bottoming process as we speak. It's just not confirmed, but they strongly believe the indications are there that there's a bottom of the market being put in. Then for them, the bottom of the market range is actually 16,000 to 20,000. And so if you guys are DCAing in at 16,000 to 20,000, perhaps at that drop at 17,500 that we had on the 24/7 exchanges, or perhaps if we have a double bottom, should we drop further? Or hey guys, maybe we just don't drop. Maybe the bottom is already in, and some people are already DCAing in. I think all of these, from a macro perspective, are generally good plays. Again, not financial advice, but you can imagine that in the next cycle, we're most likely to at least reach, let's say, 40,000, 30,000, 50,000, this kind of area where at least, where we may get rejected on a mid-cycle pump, just kind of like this. You see this pump here from the bottom, we had a mid-cycle pump. It didn't reach the previous all-time high, and then it reset back down to the lows. But anyone who bought in this area, they were not disappointed. It actually ended up paying off for them, even though we had a major drop of what was 50%. The market dropped another 50%. If you had rode this down and, you had bought in here thinking it was the bottom, and then suddenly there was a 50% drop in the market additionally, well, as long as you didn't panic sell, you were still buying in the bottom one third of this, bear market. And so what happened is that that was still a very good value proposition. And in the long run, it was an incredibly good value proposition as long as you were buying in the last one third of a bear market, as opposed to buying in the top one third or just in the middle, right? Which is where a lot of people were suggesting for you to buy in, and where Alpha Commission was just strongly warning, do not do that, Alpha Fam. And so we are the guys who are going to be richly rewarded. And while it may be up to you to, conservatively start to DCA in and buy up here, I'm not a DCAer. I'm not a hodler. There are very few things that I would even be willing to consider that. I'm a trader, right? So I like to trade. But if you are someone who DCAs and someone who hodls, then as long as you have the stomach to hold for, what could be, as long as 3 years, right? As long as 3 years, then, history tells us that those who are investing and are willing to hold an investment, which implies time, guys. Investing implies it takes time. Then within a 1 to 2 to 3 years, that investment can pay off at multiple points. And beyond 3 years, it can often go exponential on you in these new classes of assets, which are still young enough to have parabolic moves. Of course, if you're going for really old assets, right, like Coca-Cola or whatnot, you might not get get a parabolic move. You might not get parabolic growth out of those old corporations, but for some of these younger assets, the longer you hold them, the more likely it is that you do get that parabolic action, as long as you're holding the right assets and you're not just FOMOing in to junk candy, poo coins, which could just, be fly-by-nights or get replaced by some other project easily. These projects like Bitcoin are most likely to endure, whereas others, whether it's Doge or Sheep or whatnot, Safe Moon was one of those things, right? Those things can just disappear. So you really have to pick your investment carefully, and in rapidly changing industries like crypto, that can be a hard thing to do, which is why if you're DCAing in, if you're a hodler, you should probably be picking from the top 20 coins. And what you should also do is look back 3 years ago, look back, 5 years ago, and see if any of those top 20 coins survived. And you'll find that a significant portion of the top 20 coins actually disappeared and didn't do anything in this last cycle. And so doing your research on these coins to see if they can survive 1, 2, 3 year bear markets is incredibly important. And we can talk about that more as the bear market goes on. Maybe I can invite my friend Crypto Reda, who's a researcher, perhaps to talk about a couple of those more reliable projects, perhaps the high caps or the top 20, just to get a feel for some of those things. Otherwise, we can engage in discussions about that later. But the only thing that I want to impress upon you is that it's highly likely that as we are breaking the previous all-time high, that's a pretty good signal that we're either at the bottom or that we are in the last one-third stage of our bear market downturn, at least towards a bottom. And while I personally am targeting that 8,000 to $10,000 range, you are not foolish if you target 16,000 to 20,000. You are not foolish if you target 11,000 to 14,000. All three of those zones have very strong cases to be made for them. And in fact, there's even a case to be made for $1,000 to $5,000 Bitcoin, which is not the case that I'm going to make. I'm thinking that's a little bit extreme at this moment. Depending on how the market goes, we could potentially talk about it later, but that would really require a major global financial crisis and crash, and we're just not there yet, okay? Of course, we do have many things threatening the global macroeconomic system, but those threats are often overstated. And in the overstatement of threats, in that fear zone is often the best place to buy. And that's why I cannot discourage anyone from considering their DCA to hodling positions at any price under $20,000. Now, you guys know me, I don't recommend any hodling price above $20,000, but as the current price on the chart is 19,840, I just want to make sure that I'm putting out that message that it's not like we're up here at 30,000 or 40,000. Okay, we are almost guaranteed to be in the bottom one-third of this chart. And if we throw on the good old alpha channels, right, and switch over to log, you can see, just getting rid of this support and resistance. And let's see if I can just clean up this chart just a bit here. Doot, doot, doot. Let's see, there we go. Then you can see that we once again are at that extremely good value area of the chart, which has been reliable in the past cycle for scooping up the bottom. And while I do have measured moves that could potentially bring us lower, I do have a theory of the market which could bring us lower, as low as this green line, which I call touching the grass. As long as we're on our bloodline, right, the alpha bloodline over here, then these alpha origin channels are basically telling us that this market has bled. This market has put in its dues, and it's now time to consider being bullish in the long term perspective, maybe not the short term perspective. Right? It can still look pretty bearish on the short term perspective, and the midterm perspective can be very muddy. But the long term perspective from these levels tends, if history has anything to do with it, to be a very good value. Now, Bitcoin has shown that it can live for some time underneath this bloodline here, but that's basically from its origin when it was like $200. And so, as this asset is in higher demand around the world, then we can consider that even if it can live under there for like 3 years, if you're taking an investing perspective, that is still a pretty good risk to reward, because what you can see is that these lines move up. So even if we did dip into the green, it would only take 1 or 2 years before that green line, even if Bitcoin lived in that price zone, it would only take 1 or 2 years, maybe three at max, before that price is equal to your current price. And then there's the potential for a parabolic action to the upside. And so, from a investor's perspective, it's not the worst thing in the world. However, that is not my advice to you, and you guys understand what I'm targeting, and I could be totally wrong. So don't just go by what I'm doing. Please make your evaluations on your own. But what I can say is that if you were brave enough to be buying at 50,000 or at 47,000, or if you were trading up here, at this 40,000 or whatever level, then trading at 20,000, trading at 19,800, trading at 16,000, right? These are not scary numbers compared to how terrified you should have been to be buying at like 58,000, right? Like, if you're going to be terrified that the price can go lower, then you should be terrified at 50,000, right? You shouldn't be terrified at 20,000, because there is a limit to the bottom of these things. I mean, unless we're going to zero, there is a limit to the bottom of these things. And, anyway, it's far, far more risky to be trading in this kind of a blow off top area and this, overheated region, uh, than under the bloodline, or right, or against the bloodline here. And so, while I'm waiting for crypto to really touch the grass, so to speak, um, again, I just want to impress upon you that I could be wrong, and we could have already hit a macro bottom. In fact, if you look at the last Macro Monday video that I made a strong case for why we could have seen the bottom already, based upon indications in the stock market, which have never been wrong. Okay, so if this super cycle is going to break that rule, then that will be the first time. And so, at least for crypto, it's getting to be that point where it's a personal judgment. Okay, it's a personal judgment. That said, let's go ahead and remove the alpha origin channels, and let's just zoom into our current price on the charts and just see what I'm looking at here. What we can see, of course, is that we do have this falling wedge, which could break to the upside and give us that macro momentum zone up here. But we are just skirting along our daily momentum zone, and we did have a nice pop up. If you can see this wick right here, we were really in danger of losing our momentum zone established over here yesterday, but we did get a nice 1% pop on the charts, which there's only 100 of those 1% in any price. And so, 1% is a significant move. And that basically allowed us to stay above our momentum zone for yet another day. Now, how is Bitcoin getting away with this? How does it keep just pumping up right at the end of the day before the day closure? You can see we have 1 hour to go, and it popped up above this momentum zone that it needed to secure by the end of the day, by the end of the closing. And previously, for the majority of the time, it was underneath that price. So there are obviously whales, there are obviously institutions fighting hard to keep it above these momentum zones so that it doesn't just catastrophically break down. However, I would just point out that you know, suspending price like that isn't the same thing as bullish action. And what we really should be seeing is a pop up right here, right? This measured move on this falling wedge. And since we're not seeing that move getting us into this kind of macro bullish area, capturing the weekly 9 EMA, capturing the weekly 4 EMA, we are still macro bearish. And as we are still macro bearish, we have to consider that these potential bear flags, right? These potential bear flags could end up playing out. And where do we see these bear flags coming from? For example, it could be this move right here, right? Could take us down. And then even if you believe that that's too extreme, we do have these closer targets. I've established these closer targets based upon this little bear flag right here, right? Kind of this baby bear flag. If you just consider this area right here to be a bear flag, let's go ahead and just mark this one out. You see that? Just like its big brother up here, there's a little baby bear flag. And so if we do end up breaking down from the support here, you could see potentially 18,000, maybe even 17,500 to give us a double bottom on the chart. And then there is the potential for the failure, right? For the failure of this measured move here. And the failed move could bring us down into this 16,500 zone, which would then give us a lower price than our previous it would give us a lower low basically on the price, but that could end up giving us a higher low on the RSI, where you see this low over here, but we still would be maintaining a higher low over here. And if I switch to the weekly, that would give us a bullish divergence, which potentially could break us out of this falling wedge on the RSI. And perhaps that really is the bottom of the market. And this is most clear to see on the 2-week chart, which I've never seen anyone talk about. But if you look at the 2-week chart, this is a perfect, right? This is just a perfect falling wedge pattern there. And not sure why that that's not showing. There we go. Where you can see that again we would have some type of major breakout. If we could break out of this falling wedge on the RSI, we could have some major break to the upside. And if that if the market makers, if the institutions, if the powers that be in crypto are waiting for this pattern to play out on the RSI, then what could be happening is that we are just going to perhaps have a little bit of a fake out to the downside, putting in bullish divergence, and then carrying out these measured moves, etc., on the price, on the actual price of Bitcoin, which could carry us into those bullish areas, and then perhaps that macro bullishness goes forward. One thing that I would like to point out is that you can see how price action does tend to trend quite nicely with these contact points. Let's switch over to, let's say, a 5-day, just perhaps you can see it a little bit nicer. Yeah, you can see it pretty well here. And let's get rid of our support and resistance zones. Let's see, over here. And what you can see is if you look at just the top of this thing, we basically had a point here, point here, point here. And so it just basically followed a trend to the upside until it started rounding and then broke to the downside. And it broke after breaking this point, and this candle, very obviously, right? And this was a retest of that breakdown. And so this trend, although it's probably the weakest one because it only starts down here, that was a very obvious trend to the upside that broke down and then retested. And look here, we have another one, right? We have another one where it basically hit this point, and you can see just how these trends play with each other. You see this bottom right here at this support, and then we had this kind of node right here, this type of little node right here, and then we did have a breakdown here and a push up, but you see it bounced off here, it bounced off here, and it was the breakdown that took us to the next level. And so that was an extremely valid way to just look at this chart. And if you take this one, then similar thing, right? Take a look here. You see this point right here on top, right? Just let's see if I can just adjust this one properly. There we go. You can see that the price action just rode along this diagonal. You see this wick right here. I mean, I don't know, seeing is believing, guys. You see this wick right down to that trend line. You see that this one bounced off of it, right? You see that this inflection point where it got ahead of it and then it bounced off of it. It used it as support and then we went parabolic. And that line ended up supporting this whole price action over here. Then we look at this one, and very similar, guys. Look at this. All the way from the bottom point right here, and then supporting this whole move upwards, right? This line ended up supporting this kind of a chunky price action over here. So where you see the price consolidating, it's sitting on very key spider lines on the Bitcoin chart. And while spider lines aren't very useful in the in every scenario, they can give you perspective on what's going on, and you can use it to make a theory of where the next support may be. And you can see the current area that we are sitting on is right on this spider line, which the price movement bounced off there, rejected here, rejected here. It kind of twisted around this area, tried to recapture it. So you can see just how important that line was, right? Major bounce, breakdown, recapture, breakdown, deflection, deflection, bounce, right? This was a very significant line. And I bet if we extend it further, I mean, I bet you see something even more interesting, right? Which is that you can see that it pretty much broke off of this area. You have to consider these as like zones, right? It's not just a line. So this zone was very important right here, is right here, right here, right here, right here. This was an important zone. And while I'll just to keep it as a line to this area right here, you can see that that diagonal was very significant. And so should we be surprised that price action is sitting on top of it? And that if we had a chance to bounce, it would have been off of this line. If we had a chance to bounce, it would have been off of this line right here. If we had a chance to bounce, it would have been here. If we had a chance to bounce, it would have been here. If we have a chance to bounce, it has to be right here, guys. And if we lose this area, we are going to lose that macro support. We are going to lose this diagonal zone. This spider line is going to break down. And then where can we hypothesize that the next spider line is most likely to take place? It's going to be around 10,000. Okay, maybe I'm wrong. Maybe there's something else in here. Maybe something like this, right? Something like this. And so that could be 11,200, right? That could be the next one. And maybe, just maybe if we just use this point and this point right here, and then pull it back into a similar region, then perhaps it could be right here at 14,900. Okay, so just if we're using these kind of spider lines, let me just kind of wiggle that one just a little bit more. Try to get this a wick perfectly aligned. Try to get this wick perfectly aligned and the bottom of these candles. And then you can see something yeah, 14,200. So guys, what does this do? This pretty much is validating many of the concepts that I've been making and sharing with you guys, which is that perhaps this is the bottom of the market right now around this $20,000 figure, right? Around this 17,500 was the bottom, and then we have a chance to bounce and recapture our bullish macro momentum off of this spider line. And failing to do that, then perhaps the next one is somewhere around here, perhaps 14,000, perhaps 12,000, 11,000, perhaps 10,000. And these are quite reasonable. And the reason why I stretch my box even lower, because I'm getting the most pessimistic perspective, because I do tend to lean bearish, even though I'm not a perma bear. Then if I take some of these spider lines just from way back here with the bottom of the market, then worst case scenario, I could see that 7,000 to $10,000 area as potential here. But I would suggest that based upon price action, probably 8,000 to 10,000 is more of a bottom target for me personally. And I could be totally wrong. The market could bounce here, it could bounce here, it could literally bounce here, guys. I'm not trying to advise you where the bottom of the market is. I'm only trying to advise you on how price action has been supported in the past on these spider lines, where you do see quite obviously, support, 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 right? Support. Okay, and where these spider lines break down, you then look to the next spider line. You look to the next spider line. You look to the next spider line for the possibility of support. And while there's good, theory to be made for support and resistance, on horizontals, right? There are often so many horizontals, it's very hard to choose. And so what we can see is there is a horizontal right here on this spider line around 11,500. There's a strong horizontal around here around 14,000, just wicking below that spider line. There is a strong, horizontal right here around 9,700, and then there are a couple horizontals down here around 8,000 to 7,500 if you really did want to just have a stretch goal at the bottom there. And if you're the most pessimistic person, then perhaps you could even look at this $6,200 area if you really wanted to capture perhaps this zone off of there, right? And that could happen. Or if you just think that the market is going to totally take back every dollar that was injected with the Federal Reserve spending, that unlimited money printing, that $9 trillion of unpaid back, right? PPP loans and money printing and just a stimulus during the Trump administration, where they just gave out your money hand over fist to billionaires, taking it directly from your pocket, putting it directly into the hands of billionaires to buy back their own stocks, which they then dumped on your head back here during the good old Trump days. Then perhaps we could see the market take everything back, and you do have those supports again over here around 3,500 to $4,000, maybe 4,500, if you just believe the market is going to take it all back, as markets often attempt to do, right? But again, on a macro perspective, taking the whole Bitcoin chart into view, the 886, not from the prior low, not from the prior macro low, but from the entire Bitcoin chart, is in that 8,000, to $10,000 area. And if I do take it from the, just from the COVID dump, then that's more in line with 11,000 to 14,000 dollars, guys. And that, so pick your poison, okay? But meanwhile, we have a lot of bottom indicators. We even have indications on the stock market that this could be the bottom. So the 786 is also a reasonable level to target. And if we take that bottom of the COVID dump area and look for the 786, oh, lo and behold, the 786 is exactly where we are. So all of this is fair game. All of this is within reach. All of this has valid justifications. I strongly believe we are in the last 1/3 of the Bitcoin bear market dump, era anyway. And so while a bear market could last, 1 to 3 years, and buying in this last 1/3 is not a bad idea. And you can even take your time. You could probably wait, weeks or even months, and just see if some type of bottom pattern gets put in, and just use your EMAs on the weekly. And if you just used your EMAs on the weekly, then you could look to see where things start crossing over bullishly on the bigger time scales, where, well, I don't want to draw it, but basically where this red line down here, this a 9, this a 10 EMA, crosses above this 2120 EMA, right? So you could just use the 10 and the 20, and where they cross over, right, bullishly, where the 10 gets on top of the 20, then you could consider that perhaps the chart is starting to bottom, just like it did here, just like it did here, just like it did here, right? And while there can be, potential fake outs, more often than not, that's going to be very reliable. And anyway, you should be able to see it turning around and get out, at break even, assuming that they uncross and they start breaking negatively again, meaning the 20 gets ahead of the on top of the 10, right? So, guys, you know, there are lots of ways to think of this market on the macro. I'm just trying to share a little bit of the perspective that I have on there. And having done that, let's just go ahead and jump over to Ethereum's chart and just take a look at some of these other coins that we have going on. And you can see Ethereum basically no change from yesterday. So you can just watch what I made yesterday. Just in its daily bullish zone, it is starting to perk up into its macro bullish zone. So we'll just keep monitoring that. It really would have to get ahead of that and put in kind of a week closure, a 1 week, 2 week, 3 week closure above these levels in order to be considered starting to look macro bullish. Right now, it's just kind of getting rejected from that area and trying to hang on to it. So, this is a noble attempt by Ethereum. Bitcoin CME. No change, just basically hanging on by a thread to its daily momentum. It is going to most likely preserve that momentum coming on through the new week. But we're really going to have to check when the holiday is over because just a lot of professional traders aren't trading right now. And so even though the CME market is open as we speak, right, because they have limited hours on weekends, I don't consider this a fair synchronization of the CME and the 24/7 exchanges until the stock market really opens back up. And again, stocks have a holiday on Monday. So, same thing with the ETH, just kind of skirting by its momentum zone on the daily Stoke, but not really capturing its MACD or on the daily or its weekly. And so, the CME, the professional exchanges for Ethereum, just looks pretty weak. If we go over to CRV, one of the coins that we've been monitoring, same thing. It did get a nice bounce, and so it recovered its momentum zone. It will close the day above that minimum momentum it needed to preserve its MACD for continuation to the upside, but it's just not nowhere near its weekly bullishness yet. But this is a good sign by CRV. So CRV did pull itself back up, and it was very much in danger of losing its daily momentum. KDA, same story. It was very much in danger of losing its daily momentum. It actually skirted by, is sitting right on top of what it needs for a MACD continuation to the upside. And so KDA lives for another day. CRV lives for another day. Let's check out Zilliqa. Zilliqa, same story. Zilliqa lives another day. It was in danger of falling below its MACD. It's a kind of momentum to the upside that it would need. And let's just take a look at what that looks like. You see how this MACD is pinching together. That could suggest that the next one is going to be blue. It's going to be green, right? That it's going to have a potential run to the upside. And as long as we can preserve those daily momentums, we are getting very close to crossing to the upside and making some type of bullish momentum as opposed to just kind of sitting here almost break even with a bearish momentum to the downside. So let's just pay attention to this for yet another day. Next week is going to be very decisive for a lot of these altcoins. And now for the winner, let's go ahead and take a look at FLUX, the new guy that I have brought into the Alpha Commission in order to chart. You can see that I did recommend to the Alpha fam, right, to get in, or at least that it would be a valid entry to get in above $1.025. And that was the number that we had to beat in order to capture daily momentum while we were above our weekly bullish momentum zones. And so I thought from a risk to reward ratio, that would be a good zone. Now, I also said if we broke down from 99 cents, it would be too rich for my blood. And so 99 cents would have been the short position, but having beat a dollar 0.025, very specific number that I gave, you can see that we have just exploded through this zone that I suggested that we were likely to target up here at $1.30, and we have captured a 15% move. So congratulations, AlphaFam. You guys have beat the market. You guys have achieved a 15% growth from our entry at $1.025. And now we are kind of meeting a little bit of resistance as you see this wick right here, this kind of breakdown candle down here, this wick over here, this kind of wick here and here and here. These ones are just going to put pressure in this zone as Flux attempts to push to the upside, but we've just moved up as we speak. So this thing is quite bullish. And you can take profit at any point now. I do think that while um, while this thing is probably going to continue to go. We just don't know what's going to happen on the Bitcoin chart. So whenever you have a 15% increase, I like to start taking profits. I always like to start taking profits in the green. I don't like to take profits when candles turn red, okay, because that's too late. So a lot of the time something can just fully retrace very quickly. And so it's always a good idea to start taking a little bit of a profit, at least from my philosophy, if you hit a 15% plus, win. And so perhaps 20% is also a good area to start taking profit. And then, of course, if you get that 25%, I would really, really suggest taking profit. Around anywhere above $1.25. I would really suggest starting to consider to taking your profit just in case the market front runs you. But hey, that's up to you. This thing is literally pumping as we speak, guys. So this was an absolute win by the Alpha Commission. And by the way, I couldn't have done this without a recommendation from one of our members, John, in the community. You can join the Discord if you'd like. Sometimes we point out coins to each other. We have tips and tricks. People are talking about indicators, etc. It is free to join. And so thanks to John for pointing out this coin, asking me to do some analysis on it. I did do analysis for him because he contributes to the conversation in the Discord, and I value that. And so having done that, we did just find a winner that was able to give the Alpha Fam a nice 15% score, and looks like it's going to threaten to give us 20 to 25%. Right, as this thing just continues to pump in the face of an overall bearish market. Jumping to ADA, of course, ADA did the same thing. And what did I say yesterday, guys? Okay, so we entered ADA when we were able to capture and hold 45 cents off of the breakdown, pardon me, the retest of the breakout of this very technical, very classic falling wedge, similar to what's going on Bitcoin's chart. Only what did I say? I said ADA is going to go full Vitalik on us, and it absolutely did. And then I suggested to start taking profit around 50 cents. Of course, there is reason to believe that 52 cents was to be a likely target. You can see all of these wicks up here. I could have had just a kind of just kind of like a consideration for this zone with perhaps just kind of like a small zone in there. And yep, sure enough, we tapped it exactly. If I just look back here, that's exactly where we tapped at 51 cents. And so I recommended 50 cents because sometimes the market front runs us, but 51 cents was the magic number. You do see that pullback. The Alpha Fam did get a nice 10% move off of ADA, and of course, ADA can be used with multiples on leverage, and so perhaps you got a 25x or you got a 5x, or even if you're just beginning on leverage, maybe like a 3x or something. But that would have been a quite nice win as well. Of course, this one, similar to Flux, has a measured move higher than where it is. The only considerations that we have is that Bitcoin is really looking weak. And so if Bitcoin does decide to dump, again, when you have these 10 to 15%, right, moves on charts, it tends to be a good place to start taking some profits, which you can see, ADA traders have done. They started to take profits around that 10% pump. Perhaps you can even consider it from the breakout itself, which would make it more around 15%, right? Of course, I got in after a confirmation of holding this level. I did not recommend to get in while we were under that level because, guys, you think about it. If we have this strong level right here, then technically we were at resistance, right? We were at resistance when we did this bullish retest. But just having a bullish retest, you saw Bitcoin's kind of flopping over, right? And so I wanted us to be at support. I buy at support, guys. I don't buy breakouts. I don't buy, I don't chase candles. I buy at support. And when ADA achieved support, you can see this candle right here, right? It popped up, it broke down, but then it recaptured it bullishly right there at support, right at 45.5 cents. And then that's where this thing just went straight up because people like me buy at support, and that's why we got like a 10 to 12% move. Um, Whereas the risk takers who could have easily gotten a rejection to the bottom of this little range right here, I mean, they could have just been smacked down, right? Maybe they got a 15% move. But why would we cry over that? Because we are following rules and we are doing rules-based trading, and we're trying to use logic and statistical likelihoods. We're not just going by our feelings that we thought this thing could go to the moon. We just want to go by what makes sense. And so I consider that a win also. Congratulations to the Alpha Fam. We got those wins on ADA and Flux. We successfully de-risked on Zilliqa, Cadena, and we haven't entered in Curve DAO yet, although this is one that we're watching just because, again, it does have those very interesting EMA setups on the daily, where depending on how this thing pumps, although it's getting rejected by the 9 daily right now, if this thing can just recapture just a little bit more momentum, then it could potentially get into a daily squeeze play. So again, that was recommended by my friend Crypto Reda to watch this one. By the way, he didn't say enter it. I just want to be clear, okay? Like that's just to be very factual. He didn't say to enter it. It's just one to watch because of the daily EMA setup. And so again, like we are just on watch for this one. So I'm going to pay attention. If the rest of the charts turn bullish, this one could potentially enter a daily squeeze play. But for the time being, we're playing Flux, we're playing ADA, we're just kind of chilling out regarding Zilliqa and Cadena. These ones are starting to look a little more interesting. You can see Cadena getting into a little bit of a squeeze here on the daily, right? With the 4 and the 9. That's why I use the 4 EMA, guys. I do like how it interacts with the 9 EMA. And so I am seeing a little bit of a positive squeeze. If we get a little bit more of a positive indication on the 9, then perhaps I'll consider to enter Cadena, especially if it gets over this 368 level, which would be its support, similar to what I was talking about on ADA. You know, we don't really want to buy at resistance. You can see resistance, 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 resistance. This didn't even hit it because it's such resistance. You see, this previous support has been turned into resistance. And so why would I buy right here, right? Why would I buy at resistance? I want it to flip to support. Then we can talk about getting into Zilliqa, right? Pardon me, Zilliqa. And Cadena is actually at support, right? It is at support. You see support, 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 support. It broke under support, which was why I was bearish on Cadena. And so what I want to see is Cadena to start to put in a squeeze with and prove it, not just this one candle, but maybe one or two more candles, a squeeze with the 9 and the 4. And because these EMAs are pointed so dramatically to the downside, I just want to see Cadena put in a little bit more effort before we could consider to potentially trade this range, which could be 5%, it could be more, right? And so that's what I'm waiting for those ones. Guys, this episode has been way longer than I expected it to take, so let's just stop there. Um, of course, I'm just going to flip through the VIX, the DXY. You can see the dollar is pumping again, guys. That's not good for us, okay? And then USDT dominance just going sideways. So basically, we just have a neutral position on the VIX, basically frozen from last week. We have USDT dominance just going sideways, but we do have the dollar pumping again. And so that's just two are neutral. Two of these negative things are neutral, and one of them is working against us. The dollar is working against us. And so we may just have to wait a little bit longer before the rest of the charts start doing well. And if the dollar just starts pumping up to either this growth curve or perhaps even to this trend line, hopefully not, then that could severely impact trading, and perhaps even things could dump in a major way if the dollar just decides to spike up to 111, 112, or even 114 is possible, right? So we're paying attention to these guys. And I'm gonna leave it there. Bitcoin, let's just see. Did we close the day yet? Uh, no, we still have half an hour ago. So just a little bit timing is off there. But hopefully we can close the day in this, as we are right now, just holding our daily momentum. And so then we have another day to live, basically. Okay. So, guys, that's your alpha for the day. Stay safe and happy trading.